Stephen, I'll start with you. If you heard the conversation we were just having, both Scott and Carl were providing some data and making the point that possibly the bottom is already in the market. What do you think?
Well, the bottom was a long time ago. If you think about the small amounts of setbacks that we've had, the very little that we've seen in terms of restraint in financial markets. But let's remember, this was also the year past, record high corporate profits, in excess of 45% EPS growth. We were talking about going back to the office or not. You know, what could corporate America really not like about what they just produced in this period? So we think the year ahead is going to be one of less progress, but progress nonetheless. That we had extremely easy fiscal policy, putting a lot of money in the economy that nobody really had to work for. That's debt. And that also added to profits. And that's all now slowing. And a normalization is going to mean some profit gains and some market gains. But it's going to be a different environment from this very easy period just behind us.
So, Urian, how much do you see the market's current gains borrowing from next year?
I think the market is on pretty solid footing here. We've obviously had some corrections along the way. We've certainly had a lot of damage underneath the surface in the meme stocks, like the small cap growth stocks, which have basically been dead money all year. But the S&P is up about 25%, and it's not all about the mega caps. The S&P 500 equal weighted index is also up about 25%, and about 2/3 of stocks are above their 50-day moving average. So I think this market looks pretty good. And even though we've had a massive run on 48% earnings growth, when we look at the numbers for next year, we could still see 8 to 10% earnings growth, and at a 1.5% 10-year yield and let's say a 4% equity risk premium, that points still to higher prices, based on the discounted cash flow model. The intrinsic value based on the numbers I just gave you is about 4,900. So I think we're in a solid mid-cycle phase of the market. We're no longer early cycle, but we're not quite to late cycle yet. And I think that's a period where the market can kind of stay in place for a while.